Now, today is also one of those non-technical calls. And this is actually a topic that I thought is unique to myself. The the topic is the power of non-exponential growth. Okay, that's the topic. And for Christine, who just joined, we are having a small mastermind, and feel free to unmute yourself, ask questions. We try to make this interactive. And the topic for today is the power of non-exponential growth. It has nothing almost to do with the day-to-day of Cashier Portal, but it provides the underlying surge of force that helps me run Cashier Portal. And that's my mindset, which is there is a lot of power in non-exponential growth. Now, so let me set this up. Why is this a thing? Why is this even a topic? Well, part of being a startup is that you are expected to grow exponentially. Okay. And we are growing exponentially thus far, but it's really hard to grow exponentially going forward because we as a industry, real estate just dropped like 80% in terms of activities in the last 2 or 3 years. And syndication is also not that big of a market, da da da. And so I have one of the hardest things in the last 2 years is how do you reconcile that fact? We are a startup and we're not doing what a startup is supposed to do, which is to grow exponentially or in the foreseeable future. So my answer to that is the power of there is power in growing non-exponentially. Okay. So like what do you do when you are not growing exponentially? Okay. Because which is expected of a startup. And the answer is there is actually a lot of power in thinking in non-exponential growth. And there is a lot of power in making small bets and improving gradually. So I'm gonna go through a few examples on how this mindset shift has made a difference in my life. Okay. The first thing, this has a lot of personal connection to me because my name is my legal name is like Xiaozhang Zheng, and this means in Chinese the first word means small, and then small, not smart. Zhang means improvement, and so my I guess my parents named me Xiaozhang because they want me to take a small improvement at a time. And the idea is that take one step at a time, one step at a time, um, at a time. Don't shoot for the moon. And then in Chinese, there's like a different phrase, which is don't try to go to the sky in one step. Yeah, just take one step at a time. And so that is the philosophy I looked at. So the first thing it applies to is the following: is let's talk about health. So since I started the company, I was not really exercising and I was not in the best shape. But the last 6 to 12 weeks, I got into really good shape. And and here's what happened. And people look at me, wow, like you are like a lot leaner and da da da. This is a screenshot that I'm gonna share with some of you, with all of you. And this is literally coming from my notepad. Okay, my notes. This is it. Okay. So I'm gonna paste it here. This is something I wrote and I updated like October 20th. So the last time I updated was 3 days ago. So this is like real. And basically starting on September 2nd, week one, I said, I am going to run for 5 minutes a day. I'm gonna run 3 times that week. And I actually end up running 4 times that week, but it's only 5 minutes. That's why I can do it. And then the week two is I'm only gonna run 6 minutes a day. I'm gonna run it 3 times a week. And I end up running 4 times that week. And then the following week is like 7 minutes a day. Come on, can you do seven? From 6 to 7, you can do 7. And I'm gonna run 3 times a week. And then actually I run 5 times that week. And then the following week, 8 minutes a day. 3 times a week. That's the projection. Like this is the goal. And I end up running 3 times. I meet that goal. And then week 5, 9 minutes. So literally every week, just incremented by 1 minute. Am I able to run more than 9 minutes at that time? Absolutely. I sometimes run 30 minutes, but the goal was only to run 9 minutes a week. And I end up doing it 4 times. Then week 6, 4 times. And I did a lot more walking in New York City. And then week 7, 5 times. And thus far, October 21st, which is today, which is this week, the goal was to run 12 minutes a day. And I did it on Monday. I did it on Tuesday. Today's a Wednesday. And I think I'm going to go out again just to, I meet the quota for that week. And then I have the rest of the week to spend. But this kind of non-exponential growth mindset allow me to just like, you know what, I can do it. Yeah. So that is on the health. So that's in my opinion, that's one of the biggest change that has happened in my life. Let me pause there for questions, and then let me upload something else onto the chat as well. Yeah.
So I'm curious, when you go out there and you look, you're prospecting for money, you're trying to raise funds, do you show non-exponential growth in your top line revenue? Or, it's kind of the expectation that the revenue of early stage startup companies is going to, have this hockey stick, this moon, right? This
Yeah.
exponential growth.
Yeah. So like first, since we started, we grew like I mean the initially it was just like not even relevant. It's like 100, like 80x first year and right? Like that's, and then we did like a 20x again, and then we did 4x, and then we are on track to do 2x. That's the growth. But like going forward, I'm just afraid with the real estate that this is not an exponential growing company. That's the problem. And so at this point, I'm wrestling with like, okay, what does this company even look like if we're not growing exponentially? And I'm saying that impose a lot of pressure on me. And but the the trick is from a company perspective, when you think non-exponential growth and do a good job, the nature of the thing allows you to grow exponentially. Like the nature of a software business allows you to grow exponentially. But when you try really hard to grow exponentially, and you have this like very pie in the sky expectations on yourself, you end up actually failing. So that's why what I communicate to the investors, we're like, the market is not that good, but we are doing all these right things. And I think like there is almost a what's the way to put it? There's almost a game theory going on where if I put a table here like that, so um, which is the nature the startup um, startup is lends itself to a lifestyle business. Basically, if you try to open a restaurant, this is a lifestyle business. There's no way you can make exponential growth. A startup is a exponential growing company, exponentially growing company. Okay, and then there is like you force it to grow exponentially. You are steady yourself and try to grow as much as you can. So let me write this out. You practice good business strategy, and it's okay if it doesn't grow exponentially. Okay, so that's the quadrant. This is going to fail spectacularly, meaning that if something doesn't lend itself to a startup, a rocket ship, and you pour money on it, this is going to fail spectacularly. And if this is a exponential growing company, this is natural. Okay, this is natural, so good for you. Now, if you practice good business strategy, this is going to lead to a success because you're gonna practice It doesn't deserve a rocket ship, but it's a good restaurant, and you apply good business tax, you end up to a mild success. Okay. And then this is also success. If it's an exponentially growing company and you practice good strategy, I'm arguing that this is more sustainable success. So, in regardless whether the startup is a lifestyle business or a rocket ship, by thinking almost non-exponentially yourself, at least in the early stages, it creates a more sustainable business. That's my opinion. That's sort of the thing I came up with. And so that's the dominant strategy. That this in the game theory, you always choose the bottom one. You don't want to force things. If it's so obvious that this is an Airbnb, yeah, you're gonna like put all the fuels on the fire. Yeah, yeah. I'm wondering if that is what that helps you reconcile the dilemma. That is a dilemma. That's right.
Yeah, so I was just interested, usually you're an early stage company and the expectation is that you'll have high growth, especially in the first few years. And that does put a lot of pressure on, senior management to execute on what they're showing the investors, especially when they have to go back to the well a second or third time. And,
Right.
it's kind of disheartening for the investors if you showed them a projection a couple of years ago that you'd be at this certain level of revenue, and you've missed it spectacularly, right?
Right.
So in your own, since you're talking about personal experience here, talk about kind of your personal experience and the expectations you've kind of set on yourself and your company.
Yeah, great. So in terms of the company, we when we raise money, one of the expectations was one of the things people ask me, hey, Perry, do you want to raise Series A? Do you want to go IPO? And I said I want to go IPO. I want to grow really big. But if the nature of the company is so niche that there's no way for us to get to IPO, then I'm not going to force it. Because let's imagine that the whole real estate syndication of fund management space is about, say, $200 million in total addressable, let's say $100 million in total addressable revenue potential, right? And let's suppose that for the sake of argument, we are at 5 million. For the sake of argument, we're at 5 million, hypothetically. Okay. To me, that's too small of a market that even if you pour $50 million into it, it will only get you into $100 million, into about $50 million in revenue, maybe 80. You take 80% of the market, but like, is that worth it? And that's where you try to force it, and then just keep in mind. Let's just take this fund management. Most people don't want to move within 1 year because if they move within 6 months, they're telling their investors, hey, I made a bad choice on my previous portal. You are all moving all your view guys again one more time, right? Like, so most of the time they're gonna take 1 to 2 years. And so is it worth it to raise that much money when your top line, your entire pie at that point is about $100 million in total addressable market? Um, yeah, so that's the essence. So when I'm confronted with this, I have two choices. I can continue with that. Hey, you know what? We are a startup. We're supposed to grow exponentially, and we're gonna dump money onto it. Or we are saying to ourselves, you know what? This is good, but I don't think that this entire real estate syndication space is the only thing that Cash Portal will end up doing. And as a result, we are going to get to profitability, which will be very soon. We're gonna create a sustainable business going forward. And finally, and we're gonna continue to doodle on the next big idea within the real estate. And so there are basically there were two choices in front of us. One is like dump money and grow sales and grow marketing and just like try to take as much of the market. With this economy, we don't feel like that works. And then the second path is like get to profitability, cost neutral, tell the investors this is not yet a exponentially growing company yet, but we are working on something that can pave the way to become an exponentially growing company. Yeah. But the point, however, is that there is the power in thinking that I'm okay to delay that exponential growth because I am working against the pressure of expectations. There's the expectation for us to continue to grow, but growth is not always so linear and so predictable. You have to almost take a two years of break and then you shoot up. Yeah.
I want to ask, when you were gonna first start Cashflow Portal,
Mm-hmm.
how big were your aspirations for the company? Basically, were you like thinking in your head, I'm gonna start a software company. It's gonna be
Mm-hmm.
real estate syndications. The market is big enough. I want to IPO. Was that like the thought process from the start?
Yeah, the thought process was I don't believe that a tool for syndications is ever gonna be that big. The thought process is we are going to build a marketplace that allows the GPs and LPs to connect. What I have learned after 2 years is that building a marketplace is incredibly difficult. It's really, really hard to convince anyone to invest $50,000 with a stranger. And you have like amazing GPs that create these very curated communities that meet like once a month and so on to build that relationship. And marketplace just does not lend itself to that trustworthy relationship, like without a long road ahead of us. And so then we're like, okay, without a marketplace. So even from the very beginning, I did not believe a tool will get us to a IPO company. It has to be something else that has a better moat. Yeah. And then what has changed since like last few years, last couple years is that we don't believe the marketplace is moving in that direction. And as a result, we need to go back to what we do well, which is a B2B software company. And in that world is we have also two choices. The first choice is to take our platform and then go into every vertical, go into VCs, go into private equity, go into a bunch of these verticals, and they're like, hey, do you want this cap table management software? That's the first choice. The other choice is we are drawing a line on the sand and we are becoming a real estate company, meaning we are going to be the technology for you if you are in real estate. We're going to help you with the CRM. We're going to connect with your website. We're going to help you raise money using investor portal. And we are a property management. And then we are also asset management by drawing analytics from your real estate. And then finally, we are going to publish those real analytics, should you want to your investors in the fully vertically integrated workflow. And so that's the route I chose. Why? Because real estate and I have more product founder fit than taking the same software and go to like private equity and so on and so forth. Now, I could be wrong, but that is the strategy that we took. Yeah. Cool.
So you're trying to market cash flow portal as more than simply a fund administrator, correct?
Can you repeat that, Paul?
I said you're
Market.
trying to market cash flow portal as more than just a fund administrator.
Correct. Yeah.
Yeah.
We are a real estate fund administrator, but we also want to be a real estate property management software. And we also want to be a real estate bank. And then eventually, the goal of Cash Flow Portal is actually the following. And this is when we will get big. But I still don't like to think that big. Okay. I don't know. I think let me get back to the original point, which is the point of this talk is to think that we have high ambitions. I have high ambitions, but the way I operate is almost to set myself not that high of a goal, because not setting myself that high of a goal allows me actually to achieve things, as opposed to set too high of a goal. So but if you ask like how high is the goal is actually very ambitious. 10 years from now, this is what cash pool should look like. If you are a tenant, your landlord, it should be a potential customer of ours, because they might be most likely are using our property management software. Whether it's residential or whether it is you living in a multifamily or living in the apartment complex, your landlord is most likely a customer of ours. If you are buying a house one day, we will want to have a bank, or we will have a lending service. And we are going to give you the following. We're going to give you a credit card in which you can use to pay your mortgage. And you're going to earn points on that mortgage. And so if you're a homeowner, you are definitely also a potential customer of ours. So when that's the goal in 10 years, then regardless who you are 1 degree of separation from us. Either your landlord is our customer or you are our customer. And that's a huge market. And if you look at from that point of view, the right now syndication and fund admin is just an entry point into that journey. Yeah. Now, why do we have the confidence? You can say, why did you not even start with property management software in the very beginning? Why don't you do that? And to that answer is, again, going back, I only want to start small. I don't know what we were capable of. And the true answer is it took an investor portal for us to recognize that we are pretty good at building things. We did not know that like 4 years ago. We're just like, why would I ever build a property management company that will compete with like the $10 billion giants of the world? And we built an investor portal. They also have an investor portal. And then we just like, and then we compete on that investor portal. And it turned out that we're actually better. We're not that bad. And we have been winning customers left and right. And so it took an investor portal for us to realize it's like, yeah, all these kind of like incumbents in the space, they are not always that good. And we actually have a chance to build a great product that actually serves the customers even better. Yeah. Okay. All right, so that's almost 8 minutes, almost their minutes. Okay, so Ari just joined. Cool. All right, cool. So I think that a few other anecdotes about doing small things and instead of shooting for the moon. Here's some anecdotes that I have heard. And we talk to a lot of customers, so on. If a fund manager comes to us and say we will raise $100 million fund that will do $20 million a year in terms of raise each year for the next 5 years. Okay, if they come to us this and they don't have a that big of a track record, so far is 100% certainty that they cannot raise a single dime. We have too many of these customers that kind of come in. They're like, I'm starting a $50 million fund, and you're gonna tell me everything I know about this, and then you're gonna help me with pilots and da da da. I'm just like, okay, cool. And what happens is that they don't raise a single dime. If a co-GP comes to us, worry that they cannot raise their first million because they don't know. They are worried that about approaching their coworkers in their workers about investing 50K to 100K, but they have 3 or 4 rental properties, live in Bay Area, work at a high paying job like software engineer, PM, and executive, kind of like a C-suite and so on. They almost always exceeded their $1 million expectations. They end up raising 1.5 or 2. And so I have seen the people that, you can say the easiest way to say this is the people who talk a lot or don't do much, and the people who like just worry about like their very first race end up doing spectacularly well. And they end up raising like $2 million compared to their budget of their target of 1 million. Yeah. So I think the folklore in Silicon Valley is that you must grow and you do everything to grow. And I'm saying that there's a lot of power in being realistic and creating a intrinsically good business and being intellectually honest with yourself. And that is not talked about as much. Yeah. Okay. Yeah, I had this thesis about there's power of non-exponential growth. We took a little bit of a tangent into talking about Cash Portal as a business because yeah, that's right. There is a lot of pressure being a startup that you are expected to do X, Y, Z, and so on. Our investors, for the record, are very, very understanding. They know the economy is not doing well, and we're telling them, hey, we are only doubling this year. They're like, are you serious? Like the real estate just dropped like 80% in activity, and you're still doubling. That's amazing. Like I expect you to drop, and you are still like doubling. And so our investors are very understanding. But at the same time, we also know that we need to expand the pie. But the way to expand the pie is not have this like frothy vision that like we're gonna be $100 million like in revenue anytime soon. I don't know the answer. Nobody knows the answer. All we know is in the next 6 months to a year, this is where we want to get to. This is the stuff that we built. And when it becomes this exponential growth rocket ship / escape velocity, and that is just because we got lucky. And our strategy does not always deterministically lead to an outcome. We just do the best we can, run a good business, and just like working out, by running just a little bit, it's actually easier for me to end up running a marathon than trying to like this week I'm gonna run 5 minutes. Next week I'm gonna run 10 minutes. The next week I'm gonna run 20 minutes, and the next week I'm gonna run 40 minutes. That's going to burn myself out. Yeah. Okay. Chris, what? Yeah, what? Or anyone, what are your thoughts?
I'm
Can
curious
you apply that
for,
to your life? Or go ahead. Yep.
yeah, I'm curious because um, obviously your finish line is a very ambitious finish line. So when you
Sure.
say taking small steps, what's your like time horizon? I think you said, is it like you said like 6 months to a year is kind of your small step time horizon? That's kind of what you look at as your I'm gonna take a small step. What can I do for the company 6 months to a year? That's kind of your thinking.
Yeah, that's right. That's right. Um, Now I have a naturally good ability. This is something I guess I was born with it. I do have a natural ability to know the future and then do and not do certain things based on whether it fits into the um future thing that we want to do. And so it's not like I'm short-sighted that I only focus on 6 to 12 months. That's the communication, that's the outward communication, da da da. But I also know that there are certain things when they come up, I'm like, we're not doing it. Why? Because it doesn't fit exactly the picture I'm envisioning. And so I do have that in the back of my mind. It's just not, it will be too much of a nuance to communicate as an overall strategy. Yeah. Mhm. So for example, we are doing fund admin. I think we're gonna be the first AI-enabled fund admin. And we're doing underwriting. And we now can parse PDFs, and the T12 parser is looking amazing, and we're making tremendous progress. And you can say, well, why are you working on those things? Well, that's because underwriting will eventually become a single family underwriting. And then underwriting will eventually lend itself to single family property management. So it's all connected. And then you might say, well, we are doing fund admin. And I already told the engineers that when you're building fund admin, you have to build the income, you have to build the expense tracking, and then the expense tracking, you will be prorated across different asset investments that you make, right? Because you like class A has 1 million, class B has 2 million, class C has 3 million, and then you have to prorate the expense across the classes. But in order to build that, why don't we also build a double entry accounting? Because by building those line items and ledger line items, it will lend itself very well to eventually creating the reports for property management. And so it's all these little things that we know where we're going and we are doing on work fund admin, but the fund admin underneath the hood is a bunch of line items. And the line items should be a library of themselves so that we can reuse it for property management. So it's not like we're short-sighted, only focus on 3 to 6 months. But that's the communication. I only worry about the revenue for the next 3 to 6 months. But yeah, we are doing things that they are building the foundation. And I don't hope for exponential growth. I don't demand exponential growth. For the same reason, I don't demand that I can run twice as fast or twice as long every single week. But I want to be steadily improving. And then the biggest punchline is that I feel like that's actually easier to get to exponential growth than trying to act in a way that you're supposed to grow exponentially.
So did I hear you right that you're basically wanting to create a bookkeeping software or an accounting software within the cash flow portal platform that would have a chart of accounts and
Correct.
take care? Okay.
Yeah,
So
it's a
yeah, so
double entry accounting. Yeah.
yeah. So how far out is that on your kind of agenda? Is that a few years out? He's mentioned 6 to 12 months. That's a pretty heavy lift because
It's not that hard. It's not that
okay.
hard. It's again going back to non-exponential growth mindset. I don't promise much. And I will say it's about 6 to 12 months. Yeah. Yeah. It's not that hard. Yeah. All double entry accounting is that you are debiting for a set of chart of accounts and you're crediting to another set of chart of accounts and and it's from an engineering perspective, it's not that hard. Yeah. Mm-hmm.
And with that, would the next step be to prepare certain tax reports or tax forms, or would that be outside the scope of what you're thinking about providing?
What scenario are you thinking about this? Are you thinking about like K1s or are you thinking
Yeah.
more like expense tracking?
Yeah, well, I think first K1s, and then bringing that under the hood of cash flow portal rather than
Right.
outsourcing it to.
Yeah, good question. So we are chatting with a few CPAs that we will have vertically integrated CPA and bookkeeping service. Now, it will still they are not under cash flow portal payroll. We're still making an introduction for you to them to chat, and then you will send them. They will send you the invoice, but it's a tight integration where we will take in the order front end, and then it's like we have 2 or 3 preferred cash flow portal CPAs that you can work with. They know our system back and forth, and then I will send you emails or I give you the scheduled links for all 3 of them, and you can pick which one you like. It's not like you pay cash portal and then we somehow pay them as employees. Yeah. Yeah, that's right. But yeah, that also extends to legal counsel. So yeah, in the short run, it's gonna be a full service fund admin and real estate syndication, and underwriting. That's things that we are very excited about. Underwriting is looking really, really good now. And then next step is to expand it to more of kind of this like accounting, ledgering, and so on. And then the next step is ship our very first property management software. And then go from there. Property management is very difficult on its own. And so we're gonna take it again, one step at a time. Yeah. Yeah. So that's that. Um, I think if I have to summarize, this has always been my mindset. Every time when investors ask me, it's like, when is this thing happening? Da da da. And then I always say, don't expect too much. We're working on it, or that like it's coming up in a year or whatever. And then usually we beat our expectations. And I always curious why I always beat our expectations and why we always have something in our pocket. It's because I think I operate better when I don't set of too outrageous of a goal, that I feel comfortable operating within that goal, and I tend to exceed that expectation. And because of it, my investors for Casual Portal and for real estate tend to be happy that hey, Perry is not BSing me about his objectives. Yeah.
Yeah, so this is interesting to me because have you talked to Altus Group at all? I mean, it seems like I don't know if they have what you're doing, but they have Argus Developer, Argus Enterprise, a suite of software platforms in the real estate
This one,
area. Uh,
I'm sharing my
Altus,
screen.
yeah, yes,
Yeah.
yeah. Is that a hole in their offerings? Kind of what you're doing as a fund administrator and everything else?
So like I feel like Artist Group is CRE technology. Um this is my ignorance. We don't have customers that come to us. It's like, hey, I'm using Arctis Group. Are you able to compete? I feel like so far, I don't know why. It might be they are way higher market. And second is like there's nothing that's telling me they are a very, very good investor portal. And then second, I feel like they are more in the in the space of like data analytics of like, hey, we gather a bunch of data, we can tell you what's the rank in that market. But then even in that world, I feel like CoStar is the front runner in all those things.
Mhm.
So I feel like Auto School might be pretty big. Um, Let me see. Auto Group, Crunchbase. I wonder what's their valuation. They're an independent service company. They are a public company. They are located in Toronto, started in 2005. Okay, interesting. Autos Group, stock. Yeah, they are $2 billion company. Okay, fair enough. Yeah, well, maybe that's yeah. So if you go into analytics, there are a $700 million Canadian dollars in terms of revenue. That's impressive. But yes,
So,
that
so my
is. Go ahead.
yeah, my point here, you mentioned IPO in that, and that would be great, right? But
Yes.
very few startup companies actually experience an IPO. Most of them are going to sell to, right, other
Uh,
companies looking for growth opportunities.
That's a fair point. But remember, if they are doing 700 million and they are worth 2 billion, that's a 3x multiple. And when it's 3x multiple, it means they are not really a technology company and means that the rate of growth is probably slowed down. If you look at Affodeo and then look at stock, Affodeo is a $620 million company and they're worth 7 billion. So it's a 10x multiple. So obviously, at least according to the public, people believe that Affodeo has a bigger growth trajectory, right? And that might be why that we haven't really heard. And maybe this is like all a lot more institutional investors. Okay. Um, Thank you, Paul, for saying that. That actually gives me a little bit like positive thing where hope like, hey, the market is actually not that small. Like if they can get to 700 million, why we cannot get to 700 million?
Mhm.
But I don't think this 700 million came from investor portal. It's mostly about data collection, intelligence, insights, property management, and operations. Yeah, interesting. What's the company that you used Culver's, right? Or use Data Link, Intralink?
Me?
Yeah,
So, as far as fund administrators that I've used in the
yeah,
past,
yeah.
so I've used Opus, NAV Consulting, uh,
Opus, like this.
Opus, yeah, Opus One, or yeah, I think it's
Okay, cool. Oh yeah, Opus Fund Services. Okay, cool.
Fund Services.
Yeah.
And then NAV Consulting, I've used them.
NAV Consulting. Yeah,
NAV Consulting, yeah,
yeah,
NAV
yeah, yeah.
Consulting,
NAV Consulting. Yeah, we heard of them. Yep, that's right.
yeah. Um,
And which one do you like better?
NAV.
You like
The-
nav better? Oh, really? Okay.
Yeah, but basically the customer service parts. You can actually call them and get a human if you really want
Got
to.
it. Got it. Got
With
it.
Opus, it tends to be a little harder for some reason. In fact, with one
Interesting.
fund that I've invested in, we've migrated from Opus to NAV.
Got it. Got it. We actually have a few customers that use us instead of nav. And I think the difference there is nav is all based on spreadsheets, and they're like outsource a lot of that. They have like 200 different templates for spreadsheets that based on which like waterfall you're in, and they provide a nav statement and all that stuff, right? And so we are building we build a nav statement, but we have not built the expense tracking. And that's the next part that we're looking into. And the difference is that instead of building on a spreadsheet, it's all gonna be inside the software. Yeah. Yeah. So nav statement. Give me 1 second. Let me show you our nav statement here. This is cool. Okay, so here's the nav statements. Let me click into this. This is
Hello,
one.
everybody. Today,
I'm gonna make this one.
Today, how they are added to a deal and how they can be viewed in the LP view. So
Okay, 1
for
second.
this deal, Monarch Apartments, we are going to add a NAV statement under the Investment Tracker tab by clicking this Add Valuation button. The valuation date can be the most recent date relevant to this NAV statement. For example,
Okay, I don't know if you folks can hear that, but here is you can put in the asset value, or you can calculate it manually, or you can calculate based on the assets and cash reserve, loan balances, and so on. And then you do all of that stuff. And then when you go into the LP view, then you are able to see, okay, this is my if I click into here, and then you can see that, oh, my NAV is 1 million now, and then this is my estimated IRR, this is my estimated equity multiple, and then I can actually export this into a PDF with my NAV statements. So none of this is hard. We just have to like keep working on it. Yeah.
Another fund is Invest Next. You probably know this one too.
Yeah, that's right. Yeah, that's right. So by the way, on InvestNext, question for you is they have an internal fund admin. Would that be a fair statement?
Yeah, I think so. Yeah.
Yeah. That's right. Yeah. So, that's right. Yeah. Yeah. I think this particular video probably should not be go on YouTube. So, I'll keep it private. Okay. Yeah, that's right. Yeah. But yeah, based on our pricing, if folks opt for this one, then if they have a fund, you get 12 hours of fund admin service per year. Right now, we're doing a lot of it manually, but as we build out the AI component and the expense tracking and so on, it's going to be it's a software that is self-serve that you can actually do a lot of it on your own. Yeah. Cool. Excellent. All right. Yeah. So here is
Thank
the
you very much.
estimated there. Yeah,
Yeah, that's nice.
Great. Cool. Thanks for dropping in. All right. Talk to you later.